Anglo Gold will pay SARS 4.5 billion to walk away from South Africa. If you like personal finance, economy and investing related topics like this one, please like, share and follow for more. Some time ago I posted a video that the majority of JSE listed companies, they are disinvesting from South Africa. I highlighted a number of issues, and one of those being supply chain disruption, more especially in the mining industry, where logistically it makes it difficult for them to transport their product from point A to point B, more especially when it comes to imports and exports, and Transnet inefficiencies and corruption. And as a result, disinvestment has been calculated to a whopping total of 103 billion of GDP has been lost in the country just for 2023 alone. So let's hear what the article says. Anglo Gold Ashanti will be before Tuesday pay South African Revenue Service SARS a total of 4.5 billion in taxes as part of their transaction to move its corporate domicile to the UK and primary listing to the New York Stock Exchange. This will see it finally exit South Africa. Article to say that it has a dividend withholding tax bill due of 4.8 billion and will pay a securities transfer tax of 351 million. This equates to a total of $240 million, but will likely be lower due to exchange rate. This will be a welcome boost for SARS, which is under immense pressure to meet the collection of forecasts announced in the budget due to lower growth, underlying the depressed commodity prices and the impact of load shedding and on corporate. Taxes in South Africa rose due to the transaction to move its business offshore. It refers to it as a corporate restructuring. In practical terms, a new UK holding company, Anglo Gold Ashanti PLC, purchased Anglo Gold Ashanti Limited. This means that the new entity now holds all of the group's assets outside of South Africa. According to the company, these are the following foreseeable benefits for its move to overseas: enhanced access to world's deepest pools of capital. That's number one. You'll remember that in South Africa we've been on grey listing, which makes it difficult for corporates to borrow money from outside sources to continue their business. 2, improved competitive position in line with companies' global peers. 4, corporate decimile in leading low risk. Running a business in South Africa has become high risk for many international corporations that have a considerable boost on our GDP. 4, minimal disruption for existing shareholder. Last but not least, listen to what this article says about JSE, as I've aforementioned before. Given the slow and steady loss of relevance of the Johannesburg Stock Exchange in global capital markets and arguably local markets, one cannot really argue with the first point. On point 3, even with post-Brexit chaos and other issues facing the UK, it would be tough to contend that SA is a lower risk jurisdiction than the UK. Those are the signs, my people. Our economy is really in trouble, and yeah, we might be seeing more of those in the future.